All right, traders, it is getting late on the 3rd of July, 2017. My name is Jameson. Let's take a look at gold here. So we can see that gold has lost this long-term support. So this is a 4-hour candlestick chart. And while losing this long-term support, we've done so with increased ease of downward movement on expanding supply. That's very bearish. That is distributive. We've lost the point of control. We're rejecting it. There's a market asymmetry that's here. So I anticipate that we'd rally higher. We confirm this prior level of support as resistance, and then we'd puke and we'd break down. Okay, so now we're looking at a weekly vertical bar chart of gold, and I've highlighted this key session here. So this key vertical session is important because it's very wide ranging. We closed at lows and we did so on very climactic volume. This is a key session, and you can see that we're actually starting to lose that area. So this suggests that all this is distributive, and if this is all distributive, how far can prices break down? It actually looks like we have head and shoulders, which would be terrible because now if you measure, do a measured move from the peak to the neckline, that's very significant downside exposure. We've lost a 200-day simple moving average. So at the present time, it looks like prices are going to break down in this $11.50 range where we found demand last time. And, aside from me just kind of generically saying, hey guys, look at this big vertical bar here, a lot of volume, this is distributive, we're rejecting the zone. Look for a second. There's 3 huge buying efforts just this year, and we didn't have higher highs. Like, look, this isn't rocket science. Like, I hope I can make this easy for everybody, but look at all the volume that's present, since 2012, 2011. This is the biggest effort. These are the largest buying efforts that have been present. And gee, why didn't all this buying effort result in new highs? Why weren't we able to overcome and trade above the this upper trend line that's present? It's because there was distribution that was present, and it was done so not on just a single session, monthly session. It's been going on for months, and now we're losing the 200-day simple moving average. This is a lot of distribution, which leaves a lot of exposure here to the downside. Let's look at a month. So here's our monthly chart, and this blue line here is a 50% retracement. So, if you're a long, or any trader, you want to know what your risk reward ratio is. Even if you're not even calculating price projections, your reward on a long position is what? Into the upper trend line of this bearish descending channel, and your downside is this 50% retracement. That is not a good trade. I think we're going to see traders step away from gold here, and there's a very good likelihood it's going to actually back test and confirm this level of support. And if this all was distributive, we could potentially see prices break all the way down, create an oversold condition relative to the trend that's here, and trade into this is under 1,000. This is into the 900 range. I'm not an Elliott wave trader. The A, B, and C wave potentially could come down to this range as well. Now, the time spent in consolidation, since I actually do want to give you a measured move, the amount of time spent in consolidation on this monthly chart will give us a bearish price objective of $700. I'll leave you with that. Good luck.